Hi there, folks. Joe McQuaid, Wealth Preservation Associates here, and welcome to our fourth module on annuities. As you may recall, if you've had a chance to see them, if you haven't, please visit our Facebook page, Wealth Preservation, and take a look at the first three videos, the first of which was basically an explanation and a comparison of a fixed indexed annuity with a fixed annuity and a direct investment in the marketplace. Our second video talked about the income rider and the opportunity to get guaranteed a lifetime income with a specific product that we demonstrated that would show a significant amount of growth over a set period of time, so that the base or the premium that was invested would be multiplied by a significant percentage increase for the purposes of taking income. Third module referred back to that income rider annuity and talked about the long-term care options that come along with the income option, and had a description of how it works for both a nursing home as well as a home health care or assisted living type of solution. And then finally, in that third module, we covered the death benefit option if income were not taken or were not needed for the nursing home or assisted living solution. Then the proceeds would pass on to the beneficiaries and would be increased by a guaranteed amount year after year, as long as the contract was in force. So those were the first three modules, and again, hopefully you've had a chance to look at them. If not, I hope you'll visit our Facebook page at Wealth Preservation and take a look at them. Today, our final module in the annuity series, and we're going to talk about you, the consumer, the client, the person who could potentially be interested in buying an annuity. I think oftentimes when I talk of the different options and different types of annuities, people are interested, but they're not sure that they fit the profile, nor are they sure that it's the right direction for them. So what we're going to do today is we're going to talk a little bit about what the profile of a typical annuity buyer is. And please do not let that prevent you from getting in touch with us, and we'll give our telephone number throughout this presentation today. We'll do that right now, 407-593-2243, and we'd welcome a call from you with any questions. But we want to give you a starting point to think about and look at whether an annuity might be the right solution for you. Now, the information that is provided in the client overview, the financial overview, and top reasons slides, which will follow this slide, is based on a major insurance company compiling 50,000 different client type annuities, and those were broken down into IRAs or qualified annuities and non-qualified fixed and fixed indexed annuity. Brief description here, or definition here, for those that might not be totally familiar. A qualified annuity or an IRA annuity is one where you have invested money that was taken out pre-tax, like a 401k plan, like an individual retirement account, like a 401(k) plan. If any one of those plans you've been investing in over your work life, that would be considered a qualified annuity or an IRA type of annuity. And the reason for that is that no taxes have been paid, and the taxes will be paid on everything as you take it out. Now, there is an exception for a Roth IRA, but I'm not going to go into the description of traditional IRAs and Roth IRAs today. But suffice it to say, a Roth IRA is treated differently. And if you do have questions on that, again, give us a call at 407-593-2243, and we'd be happy to explain that to you as well. Non-qualified is monies that you would have put in post-taxation. So in other words, after you've earned the money, paid taxes on it, and you have it in a checking account or a savings account or a money market or a mutual fund, those taxes have already been paid. And if you take that money and you put it into an annuity, that would be considered non-qualified. And the only taxes you would have to pay on that would be on the gains that you would realize down the road. Fixed and fixed indexed annuity. A fixed annuity is just a straight and simple guaranteed interest rate account that you'll get over a 5, 7, 10-year period, whereas a fixed indexed account has a combination of a fixed interest rate as well as an option to invest in some indexed types of accounts. The key is in either one of these cases, your money is safe, and we're going to talk about that as we go through the various slides. But those are the types of annuity contracts that the insurance company used to build the profile that we're about to take a look at now. On the client side itself, just looking at the high level of what kind of client would be looking at these kinds of products for their retirement portfolio. Majority of the annuity clients are in their 60s, self-profess, and self-profess, I say that because these are not underwritten products, so there is no health exam that needs to take place. So the folks that have bought these have said they're in good to excellent health. So on average, we'll believe them and assume that most of them are in good health. 65% of them are retired, and again, that information is known because of what is put on the application. That question is asked, how are you getting income right now? And if they respond pension and Social Security, the assumption is that they are fully retired. If they have Social Security, pension, and part-time income, then that they're semi-retired. And if they don't have Social Security or pension yet, but they're getting an income, then they are employed at that point, whether it be self-employed or receiving W-2 wages, they would be considered employed. 80% are homeowners. Again, they do ask those questions on the application, so that information would be available to the insurer. And nearly 75% have more than 10 years of investment experience. There is a lot of due diligence that goes into looking at a potential client for an annuity to make sure that they have the right profile for investing in this type of product. And one of the questions is the number of years of investment experience. So again, the insurance company would know that. On the financial side, 62% have a net worth of $250,000 or more. Approximately 70% have a monthly disposable income greater than $2,500 a month, so about $30,000 a year. It's greater than that. And nearly 50% have more than $50,000 in liquid assets, and that would be checking accounts, savings, money market, mutual funds. The equity in your home is not liquid. If you are if you own equities or stocks, that is not necessarily liquid. CDs, if they're in the midst of their surrender period, or annuities in the midst of their surrender period, are not considered liquid. So nearly 50% of these people have $50,000 that they could get access to at any time. One thing I do want to explain very quickly here is some folks do have a question about what is actually net worth. Net worth in its simplest terms is taking your assets, subtracting out your liabilities. So if you own a home, that home may be worth $300,000. If you have a $200,000 mortgage, the net value of that would be $100,000. So you build your net worth by looking at all of the assets that you have and then subtracting the debts or the debits that you have against that, and that's how you would create your net worth. So basically saying over 62% have a net worth of $250,000 or more. Top 5 reasons that these folks purchased an annuity: safety, lifetime income, death benefit, growth potential, and tax-deferred growth. Now, I did highlight 2 bullets here, safety and lifetime income. The reason I did that is because the key benefits or features of the fixed indexed annuity, which is the one that we're going to talk about next, because we're going to talk about an income rider annuity. And in this particular case, we're talking about a specific fixed indexed annuity rider. Income rider. 2 of the primary features of that are safety and lifetime income. Those same features do not come with a number of other products. The key feature for life insurance is the death benefit. With an annuity, the key feature is the lifetime income. A death benefit would be available if the income were not collected, but really the key feature of it is lifetime income. Growth potential, there are higher risk growth potential products out there. If you're in an IRA and in a mutual fund, you might have a tremendous upside, but you also have a potentially tremendous downside. The fixed and fixed indexed annuity create a safety net where zero is the floor. So if the markets go down below zero, you would be protected from having any of that negative gain, if you will. So lifetime income and safety. Tax-deferred growth, there are a number of different products out there that offer tax-deferred growth, including cash value in a life insurance policy. IRAs can offer tax-deferred growth. The key is, this is certainly one of the 5 reasons that folks look at a fixed or fixed indexed annuity, with the safety and lifetime income usually being the top 2 features. So we've talked about the client profile, we talked about the financial profile, we talked about the top 5 reasons why folks buy these types of annuities. And we used a baseline of 50,000 contracts in order to come up with those average numbers that we just shared with you. This table is based on a smaller sample, 18,000, but it's very focused on the fixed indexed annuity with optional rider, income rider clients. And again, it is the same major insurance company that put these numbers together, and it's broken down into 2 different types. There's the folks who are looking for guaranteed income, lifetime income, and the folks that are looking for an enhanced death benefit. Now, suffice it to say at this point, these do not have to be mutually exclusive. We have folks who are looking to get both, and there are annuity products out there that will offer an enhanced guaranteed income and an enhanced death benefit. Modules 2 and 3 that we put together and have shared with you on Facebook talks about just such a product, where actually all of the elements are in that one product. Now, these are optional elements. There are fees that are charged for these riders, so it is important to, in your plan, figure out, do we want all of these, some of these, or none of these, in order to determine what is the best type of solution for you. So as we can see here, on the guaranteed income side, the folks are slightly younger who are attracted to these, 68. The enhanced death benefit, a little bit older. Both types of client have low tolerance for risk. And as you can see, as we go from here straight on down the rest of the chart, the enhanced death benefit client profile tends to be slightly higher on the wealth scale, and usually that tells us that these folks have already figured out a way to get the guaranteed income that they need, or they have a stream of income that's significantly high, and as a result they don't really need their annuities for income, so they're going to save their annuities to pass on to their beneficiaries, whereas the guaranteed income folks have a little bit less money in hand, and so the premium average is a little bit less, their monthly income a little bit less, the household net worth a little bit less, and the liquid funds a little bit less. But all in all, both of these client profiles are in relatively good shape vis-a-vis the general population, and these are the folks who are trying to make the decision to make sure that the monies that they need for the rest of their life are there. Sources of funds, pretty much the same for everybody: checking, savings, or other annuities. So this is a quick overview, and we'd like you to kind of browse through this, and by all means take a look at it again if you would like. But then the question becomes, is an annuity the right solution for you? If you think it might be, or you have further questions, give us a call. We'll set up a free consultation. Our numbers is 407-593-2243, or visit our website at www.4wealthpreservation.com. Fill out a contact form, and we'll be happy to be in touch with you. Well, that wraps it up on our annuity modules, and again, hopefully you have enjoyed them. Hopefully the information has been useful, and we do look forward to speaking with you. So please give us a call, and You have a wonderful day. Happy investing.